Hey everybody, Ben Gleason here with Coldwell Banker. Wanted to record a video with you so you could have the most accurate information for mortgages right now as of June 12th. I know a lot is changing. A lot of people are hearing some misinformation. So I wanted to get my good friend Tina Ellis-Hoffner on the line, and we'll go over what's going on today, June 12th, so you have the most accurate information as to the mortgage market and your home buying process. So Tina, thank you so much for joining me here on this Zoom call.
Thanks, Ben. Glad to be here.
I'm glad you're here. I love talking to you. So I want to jump right into it. Tell me, if you would, what's going on. Let's start with FHA, first of all, and the rates and what's going on with FHA. Because I know there are a lot of homeowners out there that are going FHA, and we know some things have also some loans are no longer available. So let's start there, if you wouldn't mind. Tell me what are rates and what the requirements are as of today, so people know what to expect.
So rates are unbelievable. Lowest in history for mortgage financing. So it's really great. You can buy a lot of property with a low interest rate, and you can lock that in for 30 years. A lot of mortgage lenders have tightened up on the requirements for FHA due to COVID and everything that's happening in the marketplace today. Us at GRA, we went to a 620 credit score minimum required for an FHA loan, VA loan, USDA loan. We are still doing gift money if your credit scores are 680 or higher. Okay. We are doing non-occupant co-borrowers. Okay, that is being allowed. That is back. Okay. It was restricted a little bit, but that's back. Down payment assistance is kind of hard to get right now because we want the borrower to have some reserves. Also, we're verifying employment on borrowers up until the minute of closing. We don't want any reduced hours or anything happening in that area that's going to maybe affect your ability to pay. We don't want to put somebody into a house that they're not going to be able to make the mortgage payment the first month after it closes. So we want to really make sure that the borrower is still working, is planning on working in the future, and that they have some reserves. We're even looking at a lower credit score, 620 to 680. We are looking that the borrower has some reserves, God forbid something does happen. So that is a little add-on or something new in FHA.
You know what, you said so much there, and I want to go back and unpack a little bit for
okay.
Because so let's go back. So let's say, well, let me start with this. So I feel a lot of people think they can't get a loan. And one thing, I've said this to people, they're like, oh, I'm not sure of my score. You know, you need to talk to a loan officer like Tina, because one of the best things you do, let me start here, and I've seen you do it with a guaranteed rate, is that you can run scenarios as well for people. Say, okay, if you pay off this and do this over the next few months, this will improve your credit score. Okay. So I want to make sure everyone's clear about that. You know, don't wait until you're like, oh, well, this is my credit score. You can talk to a loan officer now so they can tell you what needs to be done, first of all, okay? And then second of all, let's go back to what you had mentioned, Tina, about reserves, because I think that's very important. People need to understand the reserve situation, and then also the gift situation, because a lot of people get gifts from family members for down payment. You know, it's all the time. I can't tell you the number of times people are coming to closing and, you know, mom or dad wired some funds, an aunt wired some funds. So if you can really address those two issues so people understand where we are now, that'd be fantastic.
Sure. So reserves. A reserve is your future mortgage payment in the bank. So a mortgage payment includes principal and interest, which is called P&I, principal and interest, the taxes, 1/12 of the annual tax bill, and 1/12 of the annual insurance, homeowner's insurance bill, along with, if you're putting down less than 20%, mortgage insurance. So those 5 items added together, say it's $1,200, we're going to look for 2 months of reserves in the bank. That's $2,400 after closing. That is your mortgage payment. If $1,200 is your mortgage payment, we're going to look for 2 mortgage payments in the bank, sitting in an account for reserves after the loan closes. So that is if you have a credit score between 620 and 680. And I will remind you that this is June 12th, okay? And this may change.
Hey, can I jump in real quick there? I want to emphasize that because I want to get this recording out to people as quickly as possible. The requirements have changed so drastically, so you'll probably hear us emphasize today's date a couple of times throughout this, because Monday it could be a whole different ball game. So definitely. Oh, Tina, you still there? Oh, did I lose you? You're frozen. I have to edit this out.
Oh, Ben? Oh, there you are.
We go. Okay. I can edit that out. That's no problem.
Okay.
Okay. No problem. All of a sudden I was like, oh, there's nothing there. So sorry. So yes, let's go back to the date. So the date is important because everything can change come Monday. So these are the rules as of today. And this, again, is why we want to record this. And you want to start that conversation as early as possible with a loan officer, with someone like Tina, because she can get you those answers and keep you abreast of anything that might be coming down the pike as well that might change and affect your ability to close and get a home, either, for the good or make it for a little bit more difficult. Okay. So thank you.
Well, you're welcome. I also wanted to add that when I pull your credit, it's good for 90 days. So we can work on it. I can give you advice on what to do to improve different sections of your credit. I can tell you, work on paying this down or pay this collection off. So it's good for 90 days, and I don't have to keep inquiring on it, or other people don't have to keep inquiring on it in order for you to make it worthwhile. So like you said, Ben, you should be talking to somebody and you should be strategizing, because this is a process, and depending on where you are in the process and where your score is and where your money is, you might have to take that 90 days and work it out. I've had people work on buying a house for a year.
I'm so glad you said that, because I think people forget that. They think you just go out there and you buy a house, and there are a lot of people that work on the process. They need to build up the reserves and the down payment and stuff. That's not just, you don't decide one Sunday to wake up and go, okay, cool, let's go and get a house. There is a thought process. It is, a major investment and purchase for a lot of people. So, which can affect your financial future, definitely for the better, your financial security. So, but it's not going to happen just on a whim. So appreciate you bringing that up. Now, tell me, if you would, a little bit for those that are interested in jumbo loans.
Okay.
We talked about this a little bit beforehand, because a couple of weeks ago, jumbo loans basically disappeared, and they were not anywhere to be found, essentially, for the most part. So where do jumbo loans stand now as far as people who are looking in that category of loans?
So at Guaranteed Rate Affinity, GRA, we do offer a jumbo product, and we have throughout the whole entire COVID era. And as of June 12th, we do have a 90% loan to value jumbo product. Jumbo is a mortgage loan that is greater than $510,400. So somebody who is buying in that area, they do need reserves. They would need to have 2 to 4 months of money in reserves after a loan closes. Are looking at somebody who has 720 and higher credit scores to get a jumbo mortgage. And we will do it with 10% down, minimum 10% down. So the whole jumbo market has changed. A lot of the loans that we had before, maybe with 0 down jumbo money and all that, it has gotten much tighter right now.
let me throw this out there too, because like I've had clients and who recently closed, and I need to explain this to some people because you're talking about the amount of the loan. Like they were buying a home that was, let's say, $700,000, but they had a couple $100,000 to put down. So the mortgage rate was actually below that 510 amount, the loan amount. So they didn't have to worry about the jumbo size because they still fit under the conventional loan amount. So I want to make, as basic as that might seem, a lot of people miss that. It's not the purchase price of the home. It's going to be the amount of the loan that matters. So
that's correct.
Just make sure everyone understands that. Fantastic. Now, so
don't forget the cutoff. $510,400.
There you go. Exactly. Just get underneath that number and you don't have to worry about it.
That's right.
So, okay. So we talked about conventional and we've talked about FHA. What about, as we know, and this is where I laugh because we call them non-QM mortgages, are, if anyone hears that, non-qualifying mortgages. So if Tina, I'm going to let you sort of handle this, the ins and outs of this, so people know what they are and what's going on with the non-QM.
So a non-qualified mortgage is somebody who needs to get a house and they can't qualify with the income and assets that they normally do on a conventional mortgage. So what we do is there are few products that allow someone to use bank statement loans and to use their bank statement and their cash flow to qualify. That has dried up, a lot of it. Some are coming back. It's an expensive way to finance because basically it can't be your primary residence because a lender is not allowed to do a non-qualified mortgage on your primary residence. So we do those for quote unquote investment property. And we can use your bank statement. So a self-employed borrower who is not claiming a lot of income on their tax return, and this is usually the person who has to go this route, who's not claiming a lot of income on their tax return, may present their personal and their business bank statements and qualify by their cash deposits. And that's how a non-qualified mortgage works.
Fantastic. So basically right now, people are using those for investment properties, correct?
That's correct.
Okay, fantastic. So wonderful. That's all that I have the questions for you, at least, to give everyone an update at this point. So Tina, is there anything else that you think people need to be aware of, as of today, June 12th, in the mortgage market they need to know?
Well, I think that we already touched on verification of employment. A lot of lenders are offering forbearance on credit cards, on car payments, on your mortgage payment if if you already have a mortgage. And I will tell you that if you choose to take a forbearance, please note that we will not be able to offer you a new credit for a new house or to buy a house if you don't have a house. So it's maybe something that we can't see right up front on a credit report, but when we go to update the credit report in the mortgage process, and you might already be halfway through, your finance contingency, please, please, please don't go start looking for property if you are doing this. Everything has to be brought current. Although it is not affecting your credit score to put something in forbearance and it is not going to be reported negatively, if you're not making a payment, we cannot give you new credit. So please make sure that you are talking to your real estate agent and telling them those kinds of things, and also your loan officer. It's very important. You don't want to be all of a sudden we are updating the credit because we're not seeing a payment coming through. And now we find out that, we put it in forbearance.
I'm so happy you touched on that because that is so important for people to understand that, we joke around as agents, like, okay, everyone's going to see everything at some point, in this process. And, you're not going to hide anything financially through the underwriting process. And, from the agent standpoint, we don't want you spending $500 to $1,000 on an inspection of the home. If heaven forbid we are out of the financing contingency and this comes up, you now lose your earnest money. There's so many things. So definitely that's a wonderful point. And I do want to bring up the, you said the forbearance, but then also those who have been furloughed. A agent ran into this the other day in our office. The client didn't bother to tell the agent that they had been furloughed. And Tina, I'm sure basically it's like you are not working, you have no income, so they're not going to issue a loan for a new home.
Right.
In furlough, correct?
Correct.
Okay.
Correct. We just can't. We can't put somebody in that position, and you don't have a job. And unemployment compensation is not. We cannot use that to qualify you.
I'm glad you said that. I didn't even think about that with unemployment. So
yeah.
Even though you're getting something, technically, it's not going to work. So
right.
That's great information. So, okay, wonderful. So I think this is a great update. Tina, thank you so much. I appreciate your time. I think this is helpful for a lot of people.
Thanks, Ben. I appreciate you having me.
Definitely. I'll talk to you soon.
All righty. Bye-bye.
Wonderful.
Bye.
Yes.
Did it work?